All right, so you want to unlock the secrets of Warren Buffett, one of the greatest investors of all time.
Yeah.
Well, today we're diving deep into chapter 1 of the Warren Buffett Way. Trust me.
Yeah.
This isn't just about admiring his billions.
Right.
This is about understanding how he thinks. So you can apply those same principles to your own investments.
Yeah.
Even if you're not starting with millions.
Absolutely.
Right.
It's fascinating about Buffett is that his story isn't about some secret formula.
Right.
It's really about the power of consistent learning, discipline, and really grasping how businesses work.
Okay, so we've all heard he was a numbers whiz from a young age.
Yes.
But what specifically set him on this path?
Right.
Was he just born with a stock ticker in his crib?
Well, he definitely had an early knack for numbers,
Okay.
even running little businesses as a kid.
Yeah.
But the real turning point was when he stumbled upon The Intelligent Investor by Benjamin Graham. This book, and then actually studying under Graham, changed everything.
Wow.
It was like finding the ultimate investing mentor
Yeah.
at just the right time.
Okay, hold on. For those of us not familiar with Graham,
Right.
what's so special about his approach?
Yeah.
What did young Buffett learn that set him apart?
Graham's philosophy is all about value investing.
Okay.
It's not about chasing the hottest trends.
Right.
It's about finding solid companies that the market is undervaluing. Think of it like this.
Okay.
You're at a flea market and you spot a beautiful antique that everyone else is overlooking.
Okay.
That's what Buffett learned to do with stocks.
So it's less about gut feeling and more about digging deeper
Yeah.
to find hidden gems.
Exactly.
And that's what he did with his first investment partnership.
Yeah.
Starting at age 25, he used Graham's principles to generate incredible returns for his investors.
Yeah. Impressive returns.
Averaging 29.5% annually over 13 years.
That's remarkable.
Wow, 29.5%.
Yeah.
That's way beyond what most people achieve in the market.
Absolutely.
What I find intriguing is that he managed this during a period when the Dow Jones actually experienced several dips. Was it just pure luck? Or was there something more to his strategy?
Well, luck can play a role in the short term.
Right.
But consistent outperformance like that over more than a decade,
Yeah.
that's skill.
Okay.
Buffett was using Graham's principles to find undervalued companies
Right.
with strong fundamentals,
Yeah.
even when everyone else was panicking.
The book mentions a great story about American Express.
Oh, yeah.
Their stock plunged because of a scandal. But Buffett saw it differently.
He did.
He put a huge chunk of the partnership's money, something like 40%, into American Express.
Wow.
That sounds like a high-stakes poker game, not investing.
It illustrates perfectly Buffett's contrarian approach. He doesn't follow the crowd.
Right.
He looks for opportunity amidst the chaos.
Yeah.
While others saw a sinking ship, he saw a fundamentally strong company, temporarily beaten down by external factors.
Wow.
And that bet paid off massively,
Yeah.
netting the partnership a $20 million profit.
Okay, so he had this winning formula, amazing returns, yet he decides to close the partnership in 1969.
He did.
Why walk away from a good thing? Was he just ready to retire at 39?
The market was changing, becoming more speculative.
Okay.
Remember, Buffett is all about buying certainties at a discount.
Right.
And he felt those opportunities were drying up. He'd rather walk away than compromise his principles.
That's incredible discipline.
Yeah,
Most people would keep riding the wave as long as possible.
absolutely.
But it sounds like this wasn't the end,
Right.
just a new chapter.
Yeah.
He had around $25 million at that point, right?
Yeah, around there.
What did he do with that pile of cash?
Well, that's where Berkshire Hathaway enters the picture.
Okay.
It wasn't the glamorous empire it is today.
Yep.
It's a struggling textile company.
Huh.
But it was the foundation for Buffett's next big move.
So he went from this rock star investor to running a textile mill.
Yeah.
That doesn't sound like a step up.
Mm.
Did he actually know anything about making textiles?
That's where things get really interesting.
Okay.
He wasn't trying to become a textile tycoon.
Right.
Berkshire Hathaway was a vehicle, a platform for something much bigger.
Okay.
It was the start of his journey towards building a conglomerate, a collection of businesses that he believed in and understood.
Wait, so he bought a whole company just to use it as a shell for other investments?
Yeah, in a way.
This is where I need a bit of... Explain it like I'm 5.
Okay.
Why go through all that trouble?
Yeah.
Couldn't he just keep buying stocks directly?
It's a clever move when you think about it.
Okay.
See, by owning a company outright,
Uh-huh.
Buffett gained more control over its capital.
Hmm.
He could use the profits from one business to invest in another,
Right.
creating this incredible snowball effect.
So it's like he was building his own private investment fund.
Exactly.
But instead of managing other people's money, he was using the earnings from his own businesses
Right.
to fuel further growth.
Precisely.
And that's how Berkshire Hathaway went from a struggling textile mill
Yeah.
to a massive conglomerate,
It is.
holding companies like Geico,
Uh-huh.
Dairy Queen,
Yep.
and even a chunk of Coca-Cola.
That's right.
Okay, that's a serious glow-up.
For sure.
But let's get specific.
Okay.
The book throws out some pretty eye-popping figures.
Yeah.
It says Berkshire's net worth grew from $22 million to a staggering $69 billion under Buffett's watch.
It did.
Is that even possible?
It's remarkable.
What kind of sorcery is this?
No sorcery, just smart, patient investing.
Okay.
What's impressive is not just the sheer amount of growth,
Yeah.
but the steady, consistent way he achieved it.
Okay.
Buffett's focus wasn't on quick profits.
Right.
It was on building long-term value.
Mm-hmm.
He aimed to increase Berkshire's book value per share at a rate that outpaced the average American company.
Okay, hold on. Let's break that down. What exactly is book value?
Yeah.
And why is it so important to Buffett?
Imagine you took all of a company's assets, its factories, equipment, cash,
Yeah.
and subtracted its debts.
Okay.
What you have left is its book value.
Right.
It's a measure of the company's intrinsic worth,
Right.
independent of the ups and downs of the stock market.
Mm-hmm.
Buffett focuses on book value because it reflects the real underlying value
Okay.
of the businesses he owns.
So he's not chasing hype or short-term stock fluctuations.
No, he's not.
He's looking at the core value of the company over the long term.
Yeah, exactly.
But what kind of returns are we talking about here? Was this strategy actually profitable?
Oh, it's profitable, all right.
Okay.
Under Buffett, Berkshire's book value per share went from a measly $19 to over $50,000.
Wow.
That translates to a compounded annual growth rate of 22.2%.
Okay, that's impressive. But how does that stack up against the broader market?
Right.
Like if you had just invested in a simple S&P 500 index fund, how would that compare?
Great question.
Yeah.
While the S&P 500 also saw significant gains during that same period,
Right.
its average annual return was around 10.4%. So Buffett consistently beat the market by a considerable margin,
Wow.
even with a completely different approach.
So he wasn't just riding the general market wave.
No.
He was actively selecting companies and building a portfolio that outperformed the average investor.
That's right.
But the book does mention some volatility in Berkshire's returns,
Yeah.
especially in the late 90s.
Uh-huh.
What happened there?
Well,
Did the Oracle make a misstep?
it's the dot-com bubble era.
Oh, right.
Tech stocks were skyrocketing,
Yeah.
and everyone was scrambling to get in on the action.
Right.
But Buffett stayed true to his circle of competence.
Circle of competence.
Yeah.
We keep hearing this phrase.
We do.
But what does it actually mean in practical terms? Can you give us an example?
Think of it this way.
Okay.
You're great at baking cakes, right?
I try.
That's your circle of competence. Now, would you suddenly open a car repair shop just because everyone's saying it's the next big thing?
Probably not.
Probably not,
Yeah.
because you don't have that expertise.
Right.
Buffett applied the same logic to investing. He didn't understand the tech sector,
Yeah.
so he stayed away, even if it meant missing out on some short-term gains.
So even though everyone was going crazy for tech stocks,
Yeah.
Buffett said, nope, not for me. I'm sticking to what I know.
Exactly.
That takes some serious guts,
It does.
especially when you see others making a fortune.
Yeah, it's a crucial lesson for any investor.
Right.
Don't chase what you don't understand.
Oh.
Focus on building your own circle of competence,
Yeah.
your area of expertise, and stick to it. That's what allows you to make informed decisions and avoid costly mistakes.
But this raises another interesting point.
Okay.
Buffett seems to be less active in the stock market lately. Some people are even saying he's lost his touch.
Yeah, I've heard that.
What's going on? Is he just taking it easy in his golden years?
Not quite.
Okay.
It's a combination of factors. First, the market landscape has changed. It's become more difficult to find those certainties at a discount.
Right.
that Buffett is so good at spotting.
Uh-huh.
Prices have risen,
Yeah.
and he's notoriously patient,
Right.
willing to sit on the sidelines and wait for the right opportunities.
So he's not chasing returns just for the sake of it.
No.
He's willing to let cash sit idle until the right deal comes along.
Exactly.
That's incredibly disciplined.
Yeah.
Especially in a world obsessed with instant gratification.
And here's the other major factor.
Okay.
Buffett's recent focus has shifted towards acquiring entire businesses
Okay.
rather than just buying stocks.
So that's why he bought a whole company back in the day.
Yeah.
He was playing the long game all along.
Uh-huh.
But why this shift now?
Right.
Is it just that he has more capital to play with?
It's partly about the resources, yes.
Okay.
With Berkshire's massive cash reserves, he can afford to buy companies outright.
Great.
But it's more than that.
Okay.
Owning an entire business gives Buffett greater control. He can directly influence its operations and long-term strategy,
Right.
aligning it with his vision.
So he's not just a passive investor anymore.
No, he's not.
He's taking a more active role in shaping the destiny of these companies.
Exactly.
But what does that mean for us regular folks who can't just go around buying Fortune 500 companies?
That's the million-dollar question, right?
Yeah.
How do we apply Buffett's wisdom to our own investment journeys,
Right.
especially when we're dealing with limited resources?
Yeah.
Well, there are a couple of paths you can consider.
Okay.
First, the most straightforward option is to invest in Berkshire Hathaway itself.
So let the Oracle do the work for us.
Right.
We buy a piece of Berkshire
Uh-huh.
and essentially benefit from Buffett's expertise
Yeah.
and the growth of all the companies he owns.
Exactly.
Not a bad plan.
It's like having a world-class investment manager working for you, but without the hefty fees.
But if you're looking for something more hands-on,
Right.
if you want to build your own portfolio
Yeah.
based on Buffett's principles, that's where things get a bit more challenging,
It can be a bit more challenging,
but also more rewarding.
for sure.
All right. I'm intrigued.
Yeah, okay.
So we're not just buying Berkshire stock and calling it a day.
Right.
We're taking Buffett's principles and applying them to our own investment decisions.
Exactly.
But how do we even begin to do that?
Yeah.
Where do we start?
That's what we'll delve into in the final part of our deep dive.
Okay.
It's about expanding your circle of competence, finding those hidden gems,
Yeah.
and making smart, patient investments.
Okay.
Just like the Oracle of Omaha.
Okay. You've officially piqued my curiosity.
Yeah.
I'm ready to learn how to translate these big picture strategies
Yeah.
into actions I can actually take.
Absolutely.
Don't leave us hanging.
We weren't. It's a clever move when you think about it.
Okay.
See, by owning a company outright,
Buffett gained more control over its capital.
I see.
He could use the profits from one business
Right.
to invest in another,
Okay.
creating this incredible snowball effect.
So it's like building his own private investment fund.
Exactly.
But instead of managing other people's money,
Right.
he was using the earnings from his own businesses
Yeah.
to fuel further growth.
Precisely.
Okay, and that's how Berkshire Hathaway
Yeah,
went from a struggling textile mill to a massive conglomerate,
that's right.
holding companies like Geico, Dairy Queen, even a chunk of Coca-Cola.
A lot of great company.
Yeah, okay, that's a serious glow-up.
It is.
But let's get specific.
Okay.
The book throws out some pretty eye-popping figures.
Yeah, it does.
It says Berkshire's net worth grew from $22 million
Wow.
to a staggering $69 billion under Buffett's watch.
It's pretty amazing.
Is that even possible?
It is.
What kind of sorcery is this?
No sorcery,
Oh.
just smart, patient investing.
Okay, so no magic involved.
No matter. What's impressive is not just the sheer amount of growth,
Right.
but the steady, consistent way he achieved it.
Absolutely.
Buffett's focus wasn't on quick profits.
Yeah.
It was on building long-term value.
Exactly.
He aimed to increase Berkshire's book value per share
Yeah.
at a rate that outpaced the average American company.
Yeah, he wanted to beat the average.
Okay, hold on. Let's break that down a bit.
Yeah.
What exactly is book value?
Right.
And why is it so important to Buffett?
Okay, so imagine you took all of a company's assets, its factory's equipment cash,
Yeah.
and subtracted its debts.
Okay.
What you have left is its book value.
So it's kind of like the net worth of the company.
Exactly.
All right.
It's a measure of the company's intrinsic worth,
All right.
independent of the ups and downs of the stock market.
I see.
Buffett focuses on book value because it reflects the real underlying value
Okay.
of the businesses he owns.
So he's not chasing hype or short-term stock fluctuations.
Yeah, he's not.
He's looking at the core value of the company over the long term.
Yeah, exactly.
That makes sense.
Yeah.
But what kind of returns are we talking about here? Was this strategy actually profitable?
Oh, it's profitable, all right.
Okay.
Under Buffett Berkshire's book, value per share went from a measly $19 to over $50,000.
Wow, that's incredible.
That translates to a compounded annual growth rate of 22.2%.
Okay, that's impressive.
Yeah,
But how does that stack up against the broader market?
right.
Like if you had just invested in a simple S&P 500 index fund, how would that compare?
Great question.
Yeah.
While the S&P 500 also saw significant gains during that same period, its average annual return was around 10.4%.
Okay, so significantly less.
Yeah.
Okay.
So Buffett consistently beat the market by a considerable margin,
Wow.
even with a completely different approach.
So he wasn't just riding the general market wave.
No.
He was actively selecting companies and building a portfolio that outperformed the average investor.
That's right.
But the book does mention some volatility in Berkshire's returns,
Yeah.
especially in the late 90s.
Uh-huh.
What happened there?
Well, it was the dot-com bubble era.
Oh, great.
Tech stocks were skyrocketing,
Yeah.
and everyone was scrambling to get in on the action.
Good.
But Buffett stayed true to his circle of competence.
Circle of competence.
Yeah.
We keep hearing this phrase,
We do.
but what does it actually mean in practical terms?
Right.
Can you give us an example?
Think of it this way.
Okay.
Let's say you're great at baking cakes.
Right.
That's your circle of competence.
Okay.
Now, would you suddenly open a car repair shop just because everyone's saying it's the next big thing?
Probably not.
Probably not, because
Yeah.
you don't have that expertise.
Yeah, I'd probably stick to cakes.
Exactly.
Yeah.
Buffett applied the same logic to investing.
Hmm.
He didn't understand the tech sector.
Right.
So he stayed away, even if it meant missing out on some short-term gains.
So even though everyone was going crazy for tech stocks, Buffett said, nope, not for me. I'm sticking to what I know.
Exactly.
That takes some serious guts,
It does.
especially when you see others making a fortune.
Yeah,
It's a crucial lesson for any investor.
it is.
Don't chase what you don't understand.
Right.
Focus on building your own circle of competence,
Yes.
your area of expertise, and stick to it.
Exactly.
That's what allows you to make informed decisions
Right.
and avoid costly mistakes.
That's right.
All right, so we've covered a lot of ground
We have.
from Buffett's early days
Yeah.
to his evolution into this master conglomerate builder.
He's quite the businessman.
But now let's get practical.
Okay.
We know we can't just replicate his moves exactly,
Right.
but how can we,
Yeah.
as individual investors,
Right.
even begin to apply these principles?
It's about adapting the mindset, not just mimicking the actions.
Okay.
Remember how we talked about Buffett's circle of competence?
Yes.
That's where it all starts.
Okay, but how do I define my circle of competence?
Right.
I'm not exactly running multi-billion-dollar businesses here.
Well, think about it this way.
Okay.
What are you genuinely interested in?
Hmm.
What industries or companies do you find yourself reading about?
Yeah.
Even for fun.
Okay.
That spark of curiosity
Yeah.
is often a good starting point.
So it's not just about picking random stocks.
No.
It's about aligning my investments with my actual knowledge and interests.
Precisely.
Okay.
Let's say you're passionate about video games.
All right.
You probably spend time researching new releases, following industry trends, maybe even dabbling in game development.
Yeah.
That deep knowledge gives you an edge when evaluating gaming companies. You can spot potential winners that others might miss.
That makes sense.
Yeah,
It's like my gaming hobby could actually inform my investing decisions.
exactly.
Cool.
It's about leveraging your existing knowledge to make smarter choices.
Right.
And remember, expanding your circle of competence is an ongoing process.
Okay.
Read books, attend industry events, talk to experts.
Okay.
The more you learn,
Right.
the more confident you'll become as an investor.
Okay, so step one is defining my circle of competence,
Yeah.
my area of expertise.
Right.
But then how do I actually find those certainties at a discount that Buffett keeps talking about?
Right.
Is there a magic formula?
No magic formula.
Okay.
But there are some key principles you can apply.
Right, I'm listening.
First, focus on businesses with strong fundamentals.
Okay.
Look for companies with a solid track record of profitability, consistent earnings growth,
Right.
and a competitive advantage in their industry.
Okay, so we're looking for companies that are doing well.
Yeah.
But how do we know if they're actually undervalued by the market?
Right.
That seems tricky.
It does require some digging.
Okay.
You need to analyze financial statements, understand industry trends,
Right.
and compare a company's valuation to its peers.
Okay.
There are tools and resources available to help with this, but it does take effort. Remember, Buffett spends hours reading financial reports.
Right.
This is where the discipline comes in.
So it's not just about picking a company I like.
No.
It's about doing the research to make sure it's financially sound
Yeah.
and potentially undervalued.
Uh-huh.
No shortcuts.
No shortcuts.
And this brings us to another crucial point.
Okay.
Patience.
Yes.
Buffett is famous for his long-term approach to investing.
He is.
He's not flipping stocks for quick profits.
Right.
He's buying companies he believes in
Huh.
and holding them for years,
Yeah.
even decades.
That's right.
That's easier said than done,
It can be.
especially when the market gets volatile.
Right.
I remember the last time my portfolio took a dip, I almost panicked and sold everything.
Yeah. A lot of people do that.
How do you stay calm when everyone else is losing their minds?
It goes back to that deep understanding of the businesses you own. If you've done your research,
Yeah.
if you truly believe in the long-term potential of a company.
Then short-term fluctuations become less scary.
Okay.
It's about focusing on the fundamentals,
Huh.
not the noise of the market.
So it's like tuning out the daily drama and focusing on the bigger picture.
Exactly.
That's a powerful mindset shift.
It is.
And remember, building a successful portfolio takes time.
It does.
It's not a sprint, it's a marathon.
That's a great way to put it.
You'll make mistakes along the way.
Yeah, everyone does.
Learn from them.
Right.
And keep refining your approach. The
Absolutely.
key is to stay focused on your goals. Keep learning
Yeah.
and stay disciplined.
Couldn't have said it better myself.
This has been incredibly insightful.
Good.
We've gone from Buffett's larger-than-life moves
Yeah.
to strategies we can actually apply in our own lives.
Right.
It feels empowering.
That's the beauty of it.
Yeah.
Buffett's principles are timeless and adaptable. They can guide anyone regardless of their starting point.
So to wrap this all up,
Okay.
what's the biggest takeaway for our listeners?
What's the one thing they should remember as they embark on their own investment journey?
Don't be intimidated by the complexity of investing
Okay.
or the seemingly superhuman achievements of someone like Warren Buffett.
Right.
Break it down into manageable steps.
Yep.
Define your circle of competence.
Uh,
Do your research.
okay.
Invest in companies you understand.
Right.
Be patient and stay disciplined.
That's fantastic advice.
I hope so.
This deep dive has demystified Buffett's success.
Yeah.
And, more importantly,
Yeah.
shown us how to translate his wisdom into actionable strategies
Right.
for our own financial growth.
Absolutely.
This has been an incredible journey.
It has.
Thank you for joining us on this deep dive into the fascinating world of Warren Buffett.
My pleasure.
Go forth, invest wisely,
Yeah.
and until next time, happy learning.